Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 28th of October, 2021. And we're producing our Thursday morning gold and silver price update, forecast and daily news. Today, gold and silver have moved back above resistance. But the ECB's announcement later today is likely to affect prices potentially in either direction, though we suspect it may act as a headwind rather than a tailwind. So let's take a look. Welcome to Illuminati Silver. It's Thursday, the 28th of October 2021 at 10:15 a.m. GMT +1. The weather today, it's clement. Yes, it's a pleasant, clement day. But what's not so pleasant or clement is the fact that the UK's high-tax economy is to cost households over £3,000 a year. Boris Johnson is on track to preside over a £3,000 or a $4,130 increase in tax per household by 2027, under the government's new vision of big state conservatism, according to the Resolution Foundation. Chancellor of the Exchequer Rishi Sunak's budget on Wednesday included policies that reward low-income workers, but increase taxes on middle and high-income households, the think tank said on Thursday. Adding the impact of rising inflation and household incomes are set to stagnate, Resolution said. The moves, which came alongside big spending increases, will anger many Tory lawmakers who favour low taxes and a smaller state. Now, this is a really important lesson for us all. You have those people falling below the poverty line that needs a degree of help. You have the rich billionaires or multimillionaires who manage to avoid paying taxes through having very clever accountants. Both those areas need to be addressed. But the rump of the population, i.e. us, are somewhere in the middle. And hitting us hard with high taxes is not really going to generate the economic growth that a country needs. At the same time, politicians will only get elected in today's environment by promising to spend more and more, regardless almost of which political party they belong to, which is why they do it, and which is why, ultimately, all of our economies are going to hell in a handcart. European Central Bank, important announcement today. They're talking about their interest rates. ECB poised to stick to script on inflation surge. The European Central Bank is set to reassure consumers facing surging prices and investors considering the consequences that it's just transitory and not about to spiral out of control. On the eve of data likely to show an acceleration in inflation that is already the fastest since 2008, President Christine Lagarde will emerge from the Governing Council's decision on Thursday to explain how underlying pressures remain far too weak for policymakers to pull back stimulus, even if some global counterparts are doing just that. Compounding that tricky message, the Euro region's economic rebound is hitting a speed bump caused by persistent shortages of parts and raw materials, along with jumping energy costs, both factors in the consumer price spike that is squeezing living costs. Thursday's meeting is a stepping stone towards December, when officials armed with new economic projections will determine the future of stimulus as the March end date of their flagship €1.85 trillion or $2.1 trillion pandemic bond buying program approaches. And this is where we may see, if this pans out as Bloomberg is suggesting, we may see a further strengthening of the dollar, certainly against the euro. As if that wasn't enough, we now have the Bank of England targeting finance firms lagging on climate risks from 2022. Talk about political agendas. The Bank of England said it will accelerate its efforts to ensure the financial industry is dealing with the risks from climate change next year. The Bank of England's regulatory unit will switch its approach from focusing on whether firms are meeting its expectations on climate risk to actively supervising against them, the central bank said in a report on Thursday. The UK has been at the forefront of pushing banks and insurers to prepare for the fallout from extreme weather or potential losses on loans if polluting companies go out of business. The Bank of England acknowledged that challenges like a lack of data persist, but said financial firms still need to get to grips with risks relating to climate or face regulatory consequences. The Bank of England will ask companies that aren't making sufficient progress to make clear plans and will consider using its powers and wider supervisory toolkit if necessary. Now that is definitely telling us where the political agenda is being focused. And if Britain didn't have enough problems, France seizes British trawler in post-Brexit row over fishing rights. France seized a British trawler fishing in its territorial waters without a licence on Thursday and issued a warning to a second vessel in a dispute over access to fishing grounds after Brexit. Welcome to European cooperation. BBC News. Tax rises to cost family £3,000, warns the report. Budget signals shift in Tory philosophy. The government says it makes no apologies for big spending increases. Price rises could hit highest rate in 30 years. 2 senators blocking Biden's climate agenda. Chinese launch very concerning, according to General Milley. Davos misled before £100 million health firm investment. And Clinton aide details unwanted kiss from a US senator. And for Canada, the Pope is to visit for Indigenous reconciliation. Let's have a look at the finances, see what's really happening in the real world. Dollar index marginally up, still edging close to that 94 level. We suspect it may very well hit that today if the announcement for the ECB is as we suggest it's likely to be, and Bloomberg seems to confirm. So we're currently at 93.88. Energy prices marginally down, really just reflecting the strength of the dollar. Equity markets yesterday slightly mixed in the US, with the Dow and the S&P down just over 0.5%, but the Nasdaq composite remaining broadly unchanged. Asia overnight broadly hit somewhere between 0.25% and 1%, and in the UK we're down 0.4%, and the European markets, well, the Europe stocks market is up 0.15, but the DAX is down 0.15 and the CAC is up 0.38. Economic news. We mentioned yesterday about the consumer confidence index being higher in October than it was in September and higher than expectations. Well, yesterday we saw that durable goods orders, advanced goods orders, are actually down minus 0.4%, which is lower than the previous month, but better than expectations, which were expected to be down minus 1%. Core capital goods orders were actually up in September compared to August, and trading goods minus 96 billion against minus 88. Today's interesting news is going to essentially be the jobless claims figures and also GDP real SAR figures. They are likely to have an impact. But it's tomorrow where we have the majority of the economic data that will attract the most attention. Now, interestingly, we saw gold fall yesterday early and then pick up again. As we mentioned in yesterday's video, it had fallen below this essential 1800 support level. Well, it's marginally gone above it. don't be surprised. Again, depending on what the ECB says, if they come out with something surprising, then what we're going to say is invalid. We suspect this may fall back, potentially, after the ECB announcement. Not significantly. And the dollar up 14 cents at 24.10, similar case there. We'll have to wait and see. But these are the two levels. The $1,750 to $1,800 level, up to $1,850 ultimately, is the sort of range we really see gold operating within. And silver broadly between $23 and $25, but focusing primarily in that $24 range. We shall see later today how they are impacted. Crypto markets started to rise again today, up 3% at 2.57 trillion market cap. Bitcoin regaining a little bit of composure, having fallen to about $58,000, is now at $60,000. That's it for now. It looks like it's going to be a clement day. Let's hope it is. Thank you so much for listening. Please do subscribe, press the bell sign. Until our next video. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.